Lease options. Today I'm going to show you how you can control the property, receive rent, passive income, and then sell that property without ever owning it. Here we go. And welcome back to REI Simplified. I'm your host, Adam Johnson, where we break down complex real estate situations and scenarios for people like you and me, the beginning investor. Today, I'm very excited to bring you guys a video on lease options because it's one of the unique tools that we utilize to receive that passive income to get to that financial freedom that we all look for. I'm gonna try to do this without any breaks, no cutbacks, this is just straight through, no editing. So here we go, stay with me. What is lease option? Lease option is, you probably have heard of rent to own. That is me leasing the property from a homeowner with the option to buy that property down the road. Generally speaking, you have three terms that you have to agree to between me, the investor or leasee, and the homeowner. And that is the purchase price of that property, the duration of this contract, and the amount of rent I'm going to pay them for that duration. So generally speaking, let's say I have a homeowner that calls me and they're interested in my lease option sales pitch, okay? So let's say that the home right now is worth $200,000. I want to lock that home in for $200,000. All right, so that right there is number one, our purchase price. Number two is the duration. I want to have a home in a lease option contract for at least 3 years, preferably 5 years. Why? One, I want to give the home time to appreciate. If I'm paying the homeowner $200,000, I want the house to go up at least $240,000, $260,000 so I can have a profit after all closing costs are paid. Secondly, why I want to have a 3 to 5 year duration is because I want to have passive income for that entire time. I'm gonna talk about that in a minute as far as the other side of the lease option. There's two sides. So you have the purchase price. I'm trying to lock it down in today's price of what it's worth today. I want to be able to sell it within 3 to 5 years to have the home to appreciate. I want to be able to receive rent from my incoming tenants that I'm gonna talk about in a minute. And at the end of the day, I'm the one taking the risk as the leasee in this sandwich lease option. I'm gonna tell you why it's called a sandwich lease option in a minute. So you have the first side, which is me, the investor, the leasee, working with the homeowner, okay? The other side you have over here is me, the investor, leasee, working with my sub-leasee, okay? So one thing I'm gonna say about this really quickly is that when you do a lease option contract with a homeowner, your contract must say that you have the option to sublease the property because you're going to sublease the property. If you're the person that leaves that out and the homeowner finds out that you're subleasing it without their knowledge, you can lose everything. You can lose that property and anything that you've invested into it thus far. So when I deal with a homeowner and we agree to the three terms I talked about, amongst other terms, in my lease agreement between me, the leasee, working with the homeowner, it says the leasee will have the right to sublease the property. Okay, let's go back to the other side, working with my incoming tenant. So the second side of the sandwich lease option is the person that's gonna rent from me. So what I've done when I've negotiated with my homeowner on this side of the lease option is I've negotiated a rental amount of, let's say, $1,000 per month, okay? So I'm gonna buy the house for $200,000 in the next 3 to 5 years. I am going to pay the homeowner $1,000 a month in rent for the next 3 to 5 years. So whether I have a tenant or not, the guarantee that I give this homeowner is that you will receive a paycheck, a rental paycheck from me, regardless of whether or not I have a tenant. So I take that load off their shoulders. That's part of my sales pitch, is offering them that security. Moving to my tenant. Now, I'm looking for a tenant that may not right now qualify for a long-term loan through a bank. So they need to, generally speaking, have time to raise their credit score. Maybe they just got a new job and they're not, they don't meet the requirements of certain banks as far as employment history and that kind of stuff. So I'm gonna find a tenant that makes the income, but like I said, it probably needs to raise their credit score or whatever the case may be. I'm gonna sign a contract with a tenant that's gonna say, you will buy the home in, let's say, 4 years, because I have a contract, I have 5 years to buy and sell this house. With my incoming tenant buyer, lease option buyer, I'm gonna give them less time, obviously, because if they can't buy it, I have more time to find somebody else. Let's not go down a rabbit hole. So with my incoming buyer, I'm going to tell them, hey, I have this house. I will sell it to you in 4 years for $255,000. You'll pay me rent for at $1,450 per month until you can buy the home. So what have I done there? Okay, let's look from left to right. My left, your right. Okay, let's go with it. I have worked and negotiated the terms with the homeowner. I've negotiated a purchase price, I've negotiated duration, I've negotiated a monthly payout. I've then taken that responsibility. I then went to an incoming lease option buyer to lease option from me a higher purchase price, a shorter duration, and a higher monthly payout, monthly rental payment. So when this incoming buyer pays me $1,450, I pay the homeowner $1,000. I have $450 of passive income on a property that I do not own. So Adam, how can you control a property you don't own? Okay, let's take a step back and move back to the homeowner's side. When I work with the homeowner, part of my documentation is not only the purchase agreement contract to buy the home, the lease agreement, because I'm also renting, but also I get a power of attorney signed because I'm going to need to be able to sell that home down the road. So I get a power of attorney from the homeowner saying that my business, Johnson Property Investments, has the right and ability to sell this house at a later date within a 5-year period. So what have I done? I've taken the weight off the homeowner's shoulders of having a property that they don't want to deal with or don't want to deal with tenants or whatever the case may be, they can't sell it. I've done that. I have now found a incoming buyer who probably wouldn't have qualified traditionally. I've given them an opportunity to raise their credit, to live in a house they're going to end up buying. So I've created a win-win-win situation. That's a really beautiful thing. So the pros and cons. Let's talk about pros and cons because no system is perfect. Nothing is perfect. Let's talk about the pros and cons. The pros to me, let's talk about the pros to the homeowner. The pros to the homeowner is, as I said, taking the weight off their shoulders. They're not responsible for anything because I put that in the contract that I'll take the house as is. I do get the home inspected as part of my due diligence, but I still take the house as is after that inspection unless we renegotiate terms because of anything that arose during that inspection. So the pros is they get to offload a property. They still own their property. They still have the mortgage in their name, and they get to go on about their business without worrying about a property here in my area. The cons is that while they're gone, and the house is appreciating, for example, let's say the house is worth $300,000, but I have it under contract with them for $200,000. They cannot renege on that contract. We are under legal agreement that I'm buying this house for $200,000. So that's one of the beautiful things because you want to do your market analysis and you want to see what the trends are going and what your market is appreciating, yearly, and kind of do an educated guess on where you think this house will be in 4 to 5 years. So the cons is that they're giving up all potential equity, but that's also a risk that they have to take because otherwise the other side of that coin is they deal with the house remotely, and that's something no homeowner wants to deal with the house while you're 3,000 miles away, working a job, dealing with your own problems and family issues there, worrying about a house in my area. So the pros and cons are there. The pros and cons for the buyer, the incoming rent-to-own buyer. The pros is that he qualifies for a property that he probably wouldn't have qualified for. I'm giving him an opportunity. They're living in a house that they're going to buy. Instead of throwing rent away, they're actually putting a deposit down and living in a house they're going to buy. They can kind of grow roots. Their kids can go to that school system without being concerned of moving every couple years like military people do. It's a great thing. The cons is that I'm gonna cover this in a minute. The cons is that for the home buyer, the incoming buyer, is that they put a deposit down on that house. When I work with an incoming buyer, I make them put down 3 to 5%. So on $200,000, 3% will be $6,000, 5% will be $10,000. They put down $10,000 that is non-refundable. All right, I can't say that loud enough. In my contract is big bold letters. That money is non-refundable. Why is it non-refundable? When I have an incoming buyer sign a contract with me for 3 or 4 years at $250,000. They put $10,000 down, now they owe me $240,000. Like I said before, if that house appreciates and goes up to $300,000, the house is locked in. I can't sell to anybody but the incoming buyer. If a person drives by and offers me $500,000, I cannot sell that house. So the incoming lease option buyer, working directly with me, the middleman, has locked my property down for that duration. So that's why that money is non-refundable. Now, let me just say the pros and cons for me, the middleman, the investor. Obviously, I'm working both ends, and obviously I'm responsible for everything. You know, I got to keep homeowner happy. I got to keep incoming buyer happy. Not a big deal. Easy to do. If your contracts and documentation are on point, it's not hard to do. So the pros is that I'm creating equity. If I'm locked in for $200,000 from the homeowner, and I'm locked in at $250,000 from the incoming buyer, I've created $50,000 of equity. Okay, that means something to other investors. We'll talk about that later. I have passive income. I am receiving $1,450. I'm paying out $1,000. I'm receiving passive income. So that's very, very beautiful. The cons to me, the middleman, the sandwich lease investor in this case, is that I've locked that price in. So let's say, God forbid, that the housing market tanks. I can't renegotiate the price, for $170,000 because the market has went down. I'm locked in at $200,000. Also, I owe that homeowner $1,000 per month, regardless of how great or bad the economy is, regardless of how the tenant does or does not pay me, regardless of any damages they done to that house. Does not matter. I'm on the hook every month for the next 60 months at $1,000 per month. So everything is pros and cons. Nothing is super secure, but in this manner, we're able to, again, control the property, receive passive income without ever having to mortgage a house. The deed does not transfer. It's a beautiful thing. Look at my little notes real quick and other things to talk about with you guys. One more con for me, the home investor. The national average of people that do lease options and incoming buyers and actually buy the home is 8%. That's a dangerously low amount. And you say, Adam, what's so bad about that? You got the non-refundable deposit. Yes, I did. However, when you have a family or a person living in a house for 3 or 4 years on a rent-to-own or lease option contract, they tend to feel like they own the home already. No matter how many times you say this is not your house until you pay it off and get the deed, they still feel a sense of ownership. They make modifications. They don't take care of certain things. It is what it is. And then at the end of our term, our 3 or 4 year term, they're gone because they can't buy the house. For whatever reason, this is going to be politically incorrect, but here it is. For whatever reason, a lease option buyer, the person with bad credit, the person that can't get funded by a bank, they just generally don't make improvements over the life of that 3 to 5 year period to get their credit fixed. I'm not sure what it is. I have my own theories, but they don't fix anything. That's who they are. They have bad credit. That's who they are. Take that for what it's worth. I told a buddy the other day about lease options. Hey man, don't expect for that lease option buyer to actually buy the house. It's great to have the passive income. It's beautiful if they actually buy the house, but don't hold your breath. So what happens at the end of that 3 or 4 year period and they can't buy the house? Simple. You put them out. You put them out, you hold that deposit, you keep that deposit, that money's gone. In their eyes, it's gone. You then go find either a new lease option tenant, a new traditional tenant, or you, depending on the market and how much the whole house has appreciated, buy the house outright. I can go get a business loan. I can pay off $200,000 to this person because the house is now worth $250,000. That's a risk that any bank will take right there. So almost any bank will loan that money for that property. So you have options. Don't hold your breath that the person with a 519 credit score is going to buy that house after 3 to 5 years. Just don't do it. You're setting yourself up for failure. Let's see. I've talked about the pros and cons. I've tried to do the best I can to break down what a sandwich lease option is, or lease option in general. Again, I'm leasing a property with the option to buy it. I don't have to. I have the option. If I can't buy the house, I don't buy the house. So let's talk about what happens if my buyer can't buy the house and I can't buy the house. Let's talk about what happens to that homeowner. If I can't buy the house in 5 years, the homeowner simply gets their house back. What have I done for that homeowner? I've maintained their property for 5 years. I've paid them over $60,000 in this situation over 5 years. On top of that, the house, the market has continued to appreciate, so I've done big favors for them. They get a house back and they can, 1, try to sell it themselves, 2, move back into the house, or 3, renegotiate similar terms with me to do it all over again. I've done this before where, for whatever reason, 3-year period passed, we didn't buy the house, my tenants didn't buy the house. We said, hey, it's been a great experience, we're putting money in your pocket. We simply renegotiated those 3 big terms I talked about. I ended up paying them more rent, but I also charged more rent. So at the end of the day, no one lost. We just didn't sell the house or buy the house as fast as we would have liked to do. So guys, that was a really quick rundown of lease option / rent to own. Those are the same thing. If you ever hear lease option, rent to own, same thing. Lease option is more technical, rent to own is more what you hear, out and about, I guess. It is what it is. I hope y'all got something out of this. I hope it wasn't just Adam Johnson rambling. And if I can help y'all, learn more about lease options, I actually have a good resource for you guys. Wendy Patton, I'm gonna leave her link below. Wendy Patton wrote a great book called Investing in Real Estate with Lease Options and Subject to Deals. Get that book. It's about 1.5 inches thick, 220 pages of good information on lease options, which is what I just discussed right now. And then subject to, which I'm gonna leave a link up right here of a video that I did a few weeks ago on subject to, which is how we really make a lot of our money and how we really grow our wealth. So as always, my name is Adam Johnson. This has been a fun video. I look forward to working with you guys. Please leave a comment. I'll read all comments. If you have not already, like and subscribe. It really helps the algorithm. It really helps us help more people. If I can do anything for you guys, shoot me a message. Until the next video, it's been fun.